Hi, welcome. I am Collar, co founder of Sublime Trading. We specialize in helping high salary earners and CEOs get consistent returns in the stock market using a simple trend following strategy in just 60 minutes a week. So, in today's video, we're going to have a pre Christmas look at the overall market. We're going to start with the S&P 500, the index for the US market, the FTSE 100, the index for the UK market, Bitcoin, which is seen as the index of the crypto market. Then we're going to have a look at the dollar index to get a look at the forex market. So let's switch to the charts now. So on your screen, you can see our chart layout. So we have the monthly time frame in the top left hand chart. The top right hand chart is the weekly time frame, and the chart stretched along the bottom is the daily time frame. So you would notice on the monthly we have green line, which is last year's high, and the red line here, which is last year's low. So the lowest point and highest point for 2021. These lines will change as we go into 2023. There will be lines for 2022, but as for now, these lines are for last year. On the weekly and the daily, we have moving averages plus a trend filter. So green when we are seeing a bull market, red when we are seeing a bear market, and grey when we're seeing consolidation or deep pullbacks. So let's start and look at the S&P 500. On the monthly time frame, this chart is in a long-term bull trend, but looking weak for December and highly likely to close as a bearish candle. We've had a bearish 2022. So this is January's candle. The price has been moving down for the whole duration of the year. Started to make progress to the upside in November, but as you can see, December is displaying a bearish candle. So we're still inside this area of consolidation. What we want to see going into the new year is for levels of resistance on the lower time frame, which is what I'm going to go through next. We want to see those broken, and that will give us an indication of a bullish trend continuation. As for now, price is still stuck inside this area of consolidation, last year's high and last year's low. So we need to see a breakout to the upside or a breakdown to the downside to confirm the end of this area of consolidation. On the weekly time frame, the bars are currently grey, so this is because price is in consolidation. But in between the 50, which is this orange line here, and the 200 simple moving averages. So price is stuck in between both moving averages and may have found a base. So you can see this low was formed in June, and price did actually break this low again in September. Price broke this low in September, used the 200 simple moving average as support, but price hasn't been able to penetrate this zonal area of support. So let's see how price behaves going forward. If we continue to see a decline, we want to see the 200 simple moving average act as support, and then we want to see a bounce from this level and a move back to the upside. On the daily time frame, the bars are currently red. They were grey on the weekly, and you can see a slow decline from the start of this year. This is the candle for January the 4th. So we can see a pattern of lower lows. All these lows, major lows are lower than each other, and also lower highs. And let me just draw in a trend line from the highs. So I'm going to project it from the high of January the 4th, which is the all-time high, and forward to the high of March 29th. And if we, after drawing this line, we can see projecting forward, this area was used as resistance. The first occasion was in middle of August, August 16th. Price came up to the trend line and the 200 simple moving average failed, and then we saw a sharp decline. And again here, or twice after that. So December 1st and December 13th. So two contacts made in quick succession with this zonal area of resistance comprising of the trend line and the 200 simple moving average. Price has since failed, and then we've seen a move to the downside. As mentioned, prices may have found a base here. So this is around the area where we have last year's high. If I just go back to the monthly, so we can see this is at $3,661. So that is roughly around here. So you can see this is acting as a support level. If we see it further moves, price may come down to this area, which is also the If I just go to the weekly, the 200 simple moving average around that point. So price has a lot of major levels of support to face if it is going to decline further. But what we're anticipating is a bounce off this zonal area of support and a move to the upside. But remember, we don't want to guess what's going to happen in the market. We want to wait for confirmation. So our confirmation here would be, first of all, a break above this trend line and the 200 simple moving average, and also the $4,000 round number, which is a psychological level of resistance. And then we want to see a break above this recent high at $4,104. So once price breaks above this zonal area of resistance and the bars turn green, then that will be our green light to start looking for long opportunities. Doesn't guarantee we will, but we want to at least wait for these levels to be broken, and then we will start looking for long opportunities. The reason why we want to wait is because price may well continue to decline, and if we jump in now, we're going to end up in positions and have our capital tied in stocks which are moving to the downside. So wait on the sidelines is very important here. So that's our look at the S&P. We're just waiting for price to break out, and then we will start taking long positions in the stock market. Let's now have a look at the FTSE 100. So the FTSE 100, if we look at the monthly time frame first, we have a reversal candle here for December. So during the month, we did have a bearish candle in play, and I was keeping an eye on this. I wanted to see how far the buyers will be able to push price back up. And what we want to see before the end of the month is a close above this major level. So this is last year's high. We want to see a close above last year's high. And this will give us an indication of potential further strength to the upside, because this will now be an area of support. And just above price, we have major levels of resistance. So we have two major levels. So the first one is at 7,688. The next one is at 7,724. So we need to see price break out of these areas of resistance and then continue to move to the upside. On the weekly time frame, the trend filter is gray. Price is now back above the 50 simple moving average and above the 200 simple moving average, but we can see price is in an area of consolidation. So from this high in February this year, price started to move sideways. We haven't seen up movements or down movement. Price has just stayed in this zone. If I just highlight this with this rectangle tool, we can now see price is inside this area of consolidation. On the daily time frame, the trend filter is currently gray, but we've seen a mixture of trend filter colors because, again, this is the area I highlighted on the weekly where we saw price was in consolidation. But what we're seeing now is prices above, at least above the 200 simple moving average. It did bounce off this level mid-December. So now we just want to see the buys continue to push price to the upside and break above those levels of resistance mentioned on the monthly time frame. Now that we've had a look at the indices for both the US and UK market, we're now going to have a look and see how the dollar index is performing, because if the dollar index trends, we tend to see strong moves in the forex market. So we want to keep an eye on the dollar index at all times. So let's have a look at the dollar index. First, start with the monthly time frame. So right now, well, first of all, we can see this shaded area. This is highlighting an area of consolidation. This began back in March 2015. Price started to move sideways and remained in this consolidation for the duration of the time and only broke out in June this year. We can see a strong and bullish candle, and then we saw a continuation to the upside. What happened following this candle in September? Price started to decline, and we anticipated a retest of this level, which was previously resistance, now support, and price has come down to this level and did actually dip deeper into this area of consolidation. But we can see from the wick of this candle for December, the buyers have now pushed price back to this level of support, and we're now anticipating a move to the upside. If we start to see a trend unfold here in the dollar index, then we're likely to see Forex pairs forming trends of their own. So right now, the candle for December is sitting at support. And let's have a look at the weekly time frame. On the weekly, the bars are red and price is at the 50 simple moving average. So we have the support level on the monthly. We also have the 50 simple moving average on the weekly. So two major levels of support just at where price is right now, reinforces this area as being a strong level of support. And again, likely to see a bounce. Doesn't guarantee we're going to see a bounce, but likely to see a move to the upside. And going down to the daily time frame, the trend filter here is grey. Price did move below the 200 simple moving average. We didn't want to see price move too low below this 200 simple moving average, but the fact that we are seeing support levels on the monthly and weekly, this is nothing much to worry about. We're still anticipating a move back up. We just want to see a move above the 21st, the 20 simple moving average, and then the 200 simple moving average, and then the 50. And then we want to see all the moving averages align where the 20 is above the 50 and the 50 is above the 200. So if you look at this period here, so look at this trend here, we can see the 20 is above the 50 simple moving average and the 50 is above the 200. This is what we want to see in a bull trend. So price is just corrected. And this is normal for the dollar index here. Back in May 2021, price was trading below the 200. Then we saw a move above the 200, and then price went on to use both the 20 and 50 simple moving averages as support. And we want to see the same thing going forward. So if price is able to move back above all three moving averages, then we want to see a trend where price is using the 20 and 50 simple moving averages as support once again. So the dollar index is setting up for a potential trend. We just need to keep an eye on the daily time frame. And once levels of resistance are broken, then we should see a trend unfold in the Forex market. And last but not least, we're going to have a look at the chart for Bitcoin, which is the index for the crypto market, because when Bitcoin moves to the upside or the downside, we are likely to see the rest of the crypto market follow suit. And if the Bitcoin chart is going sideways, we're likely to see the rest of the market also move sideways as well. So let's bring up the monthly time frame for Bitcoin. We can see price has been in a decline since November 2021. Price has consistently been moving to the downside. There have been some green candles along the way, such as these two here, February and March 2022. And we had two again, July and October 2022 as well. But in November, we had a bearish candle, and so far for December, price is forming this reversal candle. On the weekly time frame, the bars are currently red and below the 50 and 200 simple moving averages. And on the daily time frame, the bars are currently grey and below the 20, 50 and 200 simple moving averages. So if I just go back to the monthly, I've brought up the TradingView all-time history. So you can see this does seem like a really, really large correction and almost dwarfs the previous corrections we have seen in the past. So previous areas of consolidation look a lot smaller than this current one here. But if we go back in time, we can see at the time these were forming, these were actually really large at the time compared to previous ones. And if you look at this period here, so this is between November 2013 and April 2017, this did seem like a small area of consolidation once we had this consolidation unfold from December 2017. So if I scroll further back, we can see how large this area of correction was at the time. And again, if I go further back in time, we have this correction and area of consolidation which began in June 2011, and we had a breakout between February and March 2013. So the reason why I highlight these previous corrections is because if you look at the current correction, it does seem like a very deep correction. But if we have a trend that unfolds where this is how this correction is going to look, it's going to look a lot smaller, and then we're likely to see a strong move to the upside once again. So I wouldn't be too concerned about this deep correction right now, because Bitcoin is known for trending really, really well in a very short period of time. So we just need to anticipate when this current correction is coming to an end and the beginning of the next bull trend. So right now, we can see it looks weak on the monthly time frame. Price looks weak on the monthly time frame, and again on the weekly time frame. And if we look at the daily time frame, price again here is moving to the downside. And what I just want to highlight here is this previous area of consolidation from June 2022, which lasted up until November 2022. So from here, price dipped below this area of consolidation and formed another area of consolidation below the previous one. And price has just been moving inside this current area of consolidation. So this pattern may continue because we have seen this in the past as well. So this in the past based on this current trend. So here we have an area of consolidation, and above that we have another area of consolidation, and so forth. So this may just continue going forward. But what we can see is that the distance between the high and the low of each of these consolidation periods is getting smaller and smaller. So this may be signs of a potential breakout on the horizon, either to the downside or to the upside, because once price gets into a squeeze, if I just draw in a support level here, so we have a support level here, and we have the 200 simple moving average moving to the downside. So eventually we're going to get a squeeze in between support and resistance, and then when we normally see a squeeze unfold, we tend to see a breakout unfold. So either a breakout to the upside or a breakdown below support. We're anticipating a breakout to the upside because the prior trend was bullish. So price is likely to continue the prior trend sooner or later, but it's not guaranteed. So we want to wait for that confirmation. The first confirmation we need would be a break above the 200 simple moving average, as well as this $20,000 round number, which is a psychological level of resistance. So break above these, this two cluster of resistance should confirm a bullish trend continuation. We then want to see a pattern of higher highs and higher lows, and that will reinforce that we are seeing a bull trend in play. So as for now, Bitcoin is moving to the downside. As we are long-term investors, we're just going to wait on the sidelines until we get that confirmation that Bitcoin is breaking out, and then we will look for opportunities in the crypto market. So that concludes the analysis for today, which is just an outlook at the market prior to Christmas, because the market tends to get quiet leading up to Christmas and the New Year because all the traders are on holiday and away from their desk. But once we go into the new year, we should see the markets come alive once again, and that's when we should start to see trends unfolding. Don't forget to like and subscribe to our channel and hit the notification icon so that you can be alerted to all of our videos as soon as they become available, and look forward to seeing you all on the next video.